Hi, Tim Biggam for Delta Derivatives, Option Hedges and Edges, taking a look at a market that finally may need some downside hedging. We're seeing a little bit of give back today in the market as it seems to just every day make new, fresh all-time highs, although the Russell still is far from those all-time highs. So I kind of like doing a pairs trade, selling the NASDAQ, buying the Russell via out-of-the-money put and call spreads. NASDAQ over the past year up almost 40%. The Russell lagging huge, up less than 20%. So I'm selling out of the money QQQ call spreads and then selling out of the money IWM put spreads, just looking for that convergence trade to start to materialize given that relative huge outperformance by the big tech NASDAQ names here. If not, I have a hedge trade. And if we just kind of bleed out sideways here on the overall market, could have both of those spreads expire worthless. So given the action we've seen in Tesla and Beyond Meat over the past couple days, where these stocks both went parabolic, to me that kind of signals maybe a short-term top in the market as speculation has gotten to a frenzy point here. We shall see. Other than that, looking again at some of those dogs of the Dow names to hide out in here, I think certainly the Apples and Google just hit $1 trillion market cap. Microsoft certainly well above that. So we're seeing those big cap NASDAQ names, just be bought day after day. When that gets to that point, the valuations get stretched. All these names well over 30 on a PE basis, which is very rich indeed, even given how cheap money is. So I think earnings have better come in huge on these names to support the valuations. I don't think they'll be that good. I think at some point we're going to have that pullback, albeit probably not that big, given that the Fed is still easy monetary policy, although the bill buying is now starting to temper, so that can provide more of a headwind than a tailwind for the market. Otherwise, I think it's keep your powder dry. If you're an investor, I think sit on your hands here. Valuations certainly too rich for long-term investors, given where the market's at. If you're a trader, be nimble, keep those position sizes smaller, and I think putting on spreads instead of outrights here certainly makes a lot of sense. So until next time, as always, here's the good trading. Take care.